Investing can be tricky, especially when you're investing in an IPO. But what exactly is an IPO and how do you participate in it? An investor can buy shares of the issuing company by investing money and becoming shareholders of the company at a competitive price. So when a company goes public, you buy the shares and become the shareholder. So if the company has any sort of profit, you will be benefiting from it. But if the company goes in loss, then you will be losing a lot of money. So before you invest in an IPO, there's a lot of analysis or research that you need to do. So that is exactly what we are going to talk about in this video. Welcome to IndianMoney.com's YouTube channel. I'm Natalia, and today I'm going to talk about 6 factors that you need to look into before investing in an IPO. Number 1, financial performance of the company needs to be checked. So before you go ahead and invest in a company, before you put a lot of money to buy shares of a particular company, make sure that company is performing well in the market. Do a little bit research of the history of the company, how it's been performing, and when it has challenges, how did it overcome those challenges. So make sure you do a thorough research before you invest in a company. And when you do the research, if you find that the company is getting a very good revenue or a profit in the past 3 years, then it's probably a better idea to invest in that IPO. But in the past 3 years, if you feel that they have not been performing good, or they have a lot of challenges, or they have been facing a lot of crisis, then it's probably a good idea if you don't participate in that IPO. Number 2, look into the future prospects of the company. So you need to check if the company has a very sustainable model so that they can sustain themselves in the future. Do they have a good plan? If it's doing good, if it's a profitable business that you're going to invest in, do they have more plans to expand the business and make it more successful? So you need to look into details like this before you actually invest in an IPO. Number 3, what is the reason for raising funds through an IPO by the company? Why did the company now enter public offerings? What is the objective of the IPO? You should definitely look into that. Are they participating in this IPO to get more funds so that they can expand the business and make it more profitable? Or were they in loss and they are trying to raise funds so that they can incur all that loss? So you need to look into details like this before you actually invest. And not just that, an investor should know the reason of why this company is getting into an IPO before you actually invest. Number 4, check if the price of the company shares are fairly valued. So each share will have a price. So before you invest in a share, make sure that it's worth it. If you go ahead and invest in something which is not worth that much, but you're paying a lot of money to buy some shares, then that's not going to be good for you. So before you invest in a share, make sure it is very fairly valued. If you feel that this IPO or this kind of a share is a fair bargain, then go for it. But if you feel that it's overly priced and it's not that much worth, then don't go for it. So you should do a thorough research of the market and then take a decision. Number 5, check if there are any legal issues which are pending for the company. Check if the company is in trouble. Check if the company is going through any sort of legal issues. Because if they have any sort of legal issues going on, then chances are there that they might lose the case and you will lose your money because you would have invested in that company. So before you invest in a company, make sure you check they don't have any legal issues going on for them and then go forward. Number 6, check the investment grade of the IPO. Now there will be ratings which will be given by credit rating agencies like CRISIL, CARE and India Ratings. So you have to check the ratings given by these institutions. So if their rating is 4 or 5, then it's a very good IPO and you can go ahead and participate in it. But if it's less than that, then it's probably not a good idea to invest your valuable money in that IPO. So let's summarize the 6 factors that you need to look into before you invest in an IPO. Number 1, financial performance of the company needs to be checked. Number 2, check the future prospects of the company. Number 3, check the reason of why they entered into an IPO. Number 4, check the price if it's fairly valued. Number 5, check if the company has any legal issues pending. And last but not the least, number 6, check the investment grade of the IPO before you invest. So if you look into these 6 factors, if you do the research about these 6 factors and then invest your money, then you're good to go. And if you are still not sure on how to participate in an IPO, or you want to learn more about an IPO, then you are in the right place. Click the link in the description box below and download the Financial Freedom app, because in the Financial Freedom application, we have courses designed on IPO. What is an IPO and how you should participate in an IPO, and how to become successful if you participate in an IPO. And not just that, we have a lot more courses on career building or personal finance or business and farming courses in 6 different languages. So click the link and download the Financial Freedom app right now. And if you feel this video is going to be helpful for someone, then like this video and share it with them. And if you like this video, then hit the like button. If you're new to the channel, then hit the subscribe button. But don't forget to hit the bell icon so that you will be notified when we post a new video. I'm Natalia and I will see you guys in the next video. Thank you for watching IndianMoney.com. Be wise and get rich.